investors have been embracing Goldilocks, this concept where growth can be strong and inflation continues to decline. Welcome to Key Points for August. This month, our take on the strong financial markets. Can this be maintained? We look at the inflation dynamic and ask whether further falls are likely. And we look at the health of the global economy and whether actually this is supportive of the inflation and financial market dynamics here. So to the first point, there's no question that both equities and credit markets have held in better than we had expected. When we look at the S&P 500 in the United States, it's up 25% since the lows of October last year and is now only 5% away from its all-time highs. Clearly, investors have been embracing Goldilocks, this concept where growth can be strong and inflation continues to decline. Now, that has sucked in new money, and momentum in these equity markets in particular has been very robust. But a lot of the fundamentals are still deteriorating. The markets themselves, the multiples are rising, in other words, they're becoming more expensive. And when we look at things like earnings growth, it's now clearly declining. In fact, earnings in some parts are shrinking. Margins are coming under pressure. And as I said, the global growth environment is one where growth is still slowing down. So while momentum can last for longer, we still think that we have to be balanced in terms of our view in the tug of war between momentum moves higher but deteriorating fundamentals. Risk premia in equities and credit appears to us to have been completely priced out. In other words, there is a complacency in the markets that we have to acknowledge. Now, turning to the inflation dynamic, that has certainly been encouraging. We've seen headline and core numbers really come down across the world. Even in the hotspots of the UK, we're seeing better prints being registered. And the likelihood is, looking at the next few months ahead, base effects are going to be fairly decent. In other words, the outlook for inflation is going to be coming down further in the next few months. But we have to also acknowledge that energy prices have stabilized. In fact, oil prices have been picking up. Gas prices, which had been on a precipitous decline, are also bottomed and moving up a little bit as well. So you're not going to have the same tailwind that we might have seen, which is one of the reasons why the central banks are still talking with a hawkish rhetoric. Indeed, we've had the further increase by the ECB and the Fed in July. And again, they're saying that they're going to be data dependent going forward. So very encouraging news on the inflation front, but it's too early to say that inflation has been vanquished. Now, what about the global economy generally? Well, there's certainly signs that the significant move up in interest rates over the last 18 months is taking its toll. Growth continues to slow down. We've also seen the situation in China that we've alluded to later. We've got a new paper coming out in China where we're seeing the reopening really disappoint. The growth dynamic has been poor, and the policymakers, the authorities, are stepping in to bolster that growth in China. In the European situation, it's still one of really struggling, just on the cusp of recession. We're seeing the manufacturing side really shrink significantly. New orders, very disappointing here. The German economy in particular is really in recession currently, given the heavy weight of the industrial sector. Services too have come down appreciably and just are on the brink of contracting as we look forward. So Europe, again, still tipping in and out of this recessionary environment with growth still very vulnerable. When we look at the United States, there has been some more encouraging signs. The labor market remains extremely tight. Initial jobless claims have come down further. But again, here too, the impact of these higher rates is beginning to have an effect. We're seeing excess savings being used up. When we look at credit card balances, they're rising. And as a result of that, we think the consumption dynamic is going to be really challenging as we get into the back end of this year. Now remember, as always, you can read the full report on zurich.com/MSME.